Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial jargon so you don't have to. Today, we're diving into Pearl Diver Credit Company Inc., and it looks like they're making some waves in the market. So let's see what is really going on behind the scenes. Pearl Diver Credit Company Inc. is making a splash with a new plan to offer and sell up to $100 million of their common stock. This is happening through something called an at-the-market equity offering, and they filed a registration statement with the SEC to make it official. This registration statement, which is like their official permission slip from the government, was initially filed back in July and got a significant update in September. The big news is that it was declared effective by the SEC on the 19th of September 2025. This means they re-officially cleared to start selling these shares. To manage this share sale, they've entered into an equity distribution agreement. Think of this as their deal with the brokers who will actually be selling the stock. This agreement allows them to sell up to $75 million worth of their common stock. So while the total authorized is $100 million, this specific selling agreement is for $75 million. It gives them the flexibility to sell these shares whenever they see fit, as market conditions allow. It is important to note that this filing isn't an offer to sell. It is more like announcing their intention and preparedness to sell these shares. They're also clarifying that any sales need to follow the rules in every state, making sure everything is above board and legal. Now, let's talk about the stock itself. They're re-offering common stock, and it has a par value of just $0.001 per S-share. Par value is a very small nominal value assigned to stock, often much lower than its actual market price or book value. It is more of an accounting thing than anything that impacts a shareholder directly. They also have a different type of stock, a series of preferred stock that is due to mature in 2029 with an 8.00% dividend. Preferred stock is different from common stock. It usually pays a fixed dividend, like a bond, and often has priority over common stock when it comes to dividends and assets, if the company goes under. This adds another layer to their capital structure. The currency they're dealing with here is the US dollar, which is pretty standard for a US-based company. And when they're talking about selling stock, they're using the unit of shares, which is what you commonly buy and sell when you invest in a company. Their common stock is actually traded on the New York Stock Exchange under the ticker symbol PDCC. This is a big deal as the NYSE is one of the most prestigious stock exchanges in the world. And their preferred stock. This series of preferred stock is also traded on the NYSE, but under a different ticker symbol, PDPA. Having both classes of stock listed on a major exchange gives investors different ways to participate in the company. This filing mostly revolves around their common stock for this new at-the-market offering. It is a way for them to raise capital from the public, a bit like selling shares directly to the market, but through designated agents. The equity distribution agreement involves Pearl Diver Capital LLP, and they've also brought in Lucid Capital Markets LLC as a placement agent. This means Lucid Capital Markets is the one actively working to sell these shares to investors on behalf of Pearl Diver Credit Company. Now, let's talk about how the agents get paid. They receive a commission, but it is structured smartly. It is the lower of two things. One, simply 2% of the sales price per S-share, or two, the difference between the selling price and the company S-net asset value per S-share. This second part is interesting. It ensures the placement agent doesn't T-earn more than the company is effectively gaining on each share sale, tying their commission to the value they're recreating for the company and its existing shareholders. It is a way to align incentives. The Pearl Diver Credit Company isn't obligated to sell all the shares they've authorized. They can pause or stop the offerings whenever they want. This gives them a lot of control and flexibility based on market conditions and their own funding needs. They've also got legal counsel Morgan, Lewenstein Bockius LLP, who have provided a legal opinion on the issuance and sale of these shares. This is a standard but crucial step to ensure everything is legally sound. Their consent to be named as experts in the filing is also included. Finally, they're reusing something called inline XBRL, which is basically a way to present financial data in a machine, readable format, making it easier for computers and analysts to extract and analyze. It is part of the SEC's push for more transparent and accessible financial reporting. So, what is the big picture here? Pearl Diver Credit Company is setting itself up to raise a significant amount of money through the stock market. This at-the-market offering managed by expert agents suggests they have a clear strategy for using these funds. The dual listing on the NYSE for both common and preferred stock indicates a certain level of maturity and a desire to be accessible to a broad range of investors. The commission structure for their placement agent also shows a focus on value, ensuring that the agents are rewarded fairly but not at the expense of the company's overall returns. It is a well-planned move to tap into the public markets for growth capital. For our analysis, while this filing doesn't contain detailed financial tables, it is a crucial disclosure about a significant capital raising event. The fact that they reauthorized to sell up to $100 million and are starting with a $75 million distribution agreement shows they serious about funding their operations or strategic initiatives. The success of this offering will depend on market appetite for their stock and the company's ability to communicate its value proposition effectively. It is a positive sign of proactive financial management and a willingness to leverage market opportunities. We'll be keeping a close eye on Pearl Diver Credit Company Inc. as they execute this offering. What are your thoughts on this strategy? Let us know in the comments below. If you found this breakdown helpful, please give us a thumbs up and subscribe for more in-depth looks at corporate filings. And don't forget to join our Discord community for more discussions. Thanks for watching, and I'll see you in the next video.